Welcome to Research Recap, our research podcast on Making Sense, the hub for JP Morgan corporate and investment bank podcasts. In each episode of Research Recap, we'll bring you the latest industry analysis and research insights from our team of award-winning experts.
Welcome to Research Recap. My name is Sam Azzarello and I lead content strategy for global research. I'm joined today by Michael Feroli, our chief U.S. economist, to talk about the April jobs report. So, Mike, the jobs report this morning came in quite strong. Overall, what stood out to you the most in the report, and what factors contributed to the overall increase in the job numbers?
So most of the main numbers came in stronger than expected. So headline jobs increased 253,000. The unemployment rate ticked down to revisit the cycle low of 3.4%. We had a stronger than expected gain in average hourly earnings, 0.5 increase last month, the strongest in just over a year. So overall, it looks like the job market still remains strong and creating a lot of labor income. There is one qualification to the message of strength in the jobs report. It was the big downward revision to both the February and March estimates, which were revised down on net by 149,000. So the picture now is one of slowing job growth punctuated by some unusual strength in April. So the picture still looks like one where the economy is slowing and the labor market is slowing, but we did have a, hard to deny, a pretty boomy April and against that backdrop of gradual moderation.
That leads into the next question. Coming into this report, labor market signals have been mixed, and we did see that the 3-month moving average on jobs decreased from 295,000 to 222,000. So you already alluded to this, but the trend, what's the signal telling us in the reports, and going forward, what do you expect?
So I think that's probably the right way to look at it, is the 3-month average, because it smooths through a lot of the volatility, a lot of the revisions, and that 3-month average has been pretty steadily coming down. I would expect that trend to continue as we go through the summer, and we continue to look for perhaps contraction in output and employment beginning late this year. So that's still intact. Perhaps we're seeing some continued resilience, so maybe it's going to be a little later than we anticipate, but I still think the trend looks like an economy that is slowing. And we have to keep in mind we're probably not even yet seeing the impact of the assumed credit tightening that is occurring in the labor market.
And that leads us to our final question, which always involves the Fed. In your note you wrote on Wednesday, you said, "We think this was the last hike of the cycle, though we could envision one more hike in June if economic activity remains robust and the situation with the banking system calms down." Was there anything in today's report which may influence the outlook for the Fed going forward?
Yeah, I think today's report keeps the Fed in play. So I do think there's still, while we're not looking for a hike in June, I do think there is still a pretty elevated risk of that. I think 2 or 3 things why we're not yet looking for a hike in June. One is there's still a lot of data between now and the June meeting, including another payroll report. Second thing is, the banking sector, I think it's a little early to signal the all clear on the banking sector. And the third thing is, given some of the things we learned this week, it could well be that the debt ceiling X date falls pretty close to the June meeting, which obviously is another consideration for thinking about the Fed. So Fed's still alive here, but we do still believe the hike we saw earlier this week was the last of the cycle.
Thanks, Mike, for joining us. For more research insights, visit jpmorgan.com/research.
Thanks for listening to Research Recap. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JP Morgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, Google Podcasts, and YouTube. This communication is provided for information purposes only. Please read JP Morgan research reports related to its contents for more information, including important disclosures. Copyright 2023, JP Morgan Chase & Co., all rights reserved.